trading. Anjali has been on leave for past couple of months and till she comes back, I will be your new host and I hope you will bear with me. In today's session of automated trading, we will take a look on the use of this indicator which was developed by Bill Williams. It is called Accelerator, Decelerator, Oscillator, and it is pretty useful while determining the changes in the momentum of the underlying instrument. So let's take a brief look on how it is defined and how we can utilize it. Let's go verbatim. The acceleration deceleration technical indicator measures acceleration and deceleration of the current driving force, which means that it is basically a tool to use while trying to map and measure the driving force. And if suppose the instrument is in the bullish trajectory, bullish tone, then the acceleration deceleration indicator will try to see if the momentum is rising or if the instrument is losing momentum. If it is losing momentum, then it will show as a deceleration, whereas if the momentum is picking up, it will show up as acceleration. And this is a forward looking indicator, so it will change the direction before any changes in the driving force, and that will help us determine our setup uh, pretty easily, as we can determine our trading positioning and see if we need to close it or we can continue with. So that will be useful to that extent. The instrument variable, we can of course use any instrument, Euro USD, USD JPY, or for that matter any, whichever you want to develop algorithms with. The time period is also up to us, and for most of the webinars, we will be using the time frame of 1 hour. But depending on your requirements, you can utilize any time frame from 1 minute or even 10 seconds to day or week. So there is no restriction on that. This indicator is defined using these two fast period and slow period threads, and here the fast period will be defined at 5 and the slow period is at 34, and these are default setups. I have not made any changes to that. The positive and negative values, the positive value indicates that the underlying momentum is in the bullish territory, whereas when the values turn negative, that means that it is in the bearish territory, and this kind of gives us an idea of the underlying trend. When it is positive, that means it is in the bullish trend, whereas when it is negative, it means it is in the bearish trend. And before we go into the charting and then the setup, first of course it's necessary to provide the disclaimer. The algorithms which we will be building in this webinar session are for tutorial purposes only. They don't constitute any trading advice, or no claim is being made regarding the profitability or otherwise of the algorithm which will be shown here. And even if you develop algorithms using whatever we will be discussing here or on your own, I would advise that extensive trial runs must be first done for extended period of time, and also you can keep it running on the demo account for sufficient enough time to see that trades are being executed as we intended to, and not unintended not in an unintended manner. So let's get started for the day. First we will see on the chart how the acceleration deceleration oscillator looks like. So here we are. This is the hourly setup for the Euro USD, and as you can notice that it pretty much depends on the underlying momentum. So here you can notice that this momentum shifted from the bearish undertone to bullish, and as you can see, and for next couple of hours the momentum was on the bullish side, and the euro USD rose from around 1.08 to almost 1.081. So that's the way we can utilize this acceleration deceleration oscillator, and what that means is we will always get an idea of when the momentum is shifting from bullish to bearish, and then we can trade accordingly. So our purpose is that we only want to trade when the momentum shifts in the initial time frame. So here, when the momentum shifts from bearish to bullish, we want to take a buy trade. When the momentum shifts from bullish to bearish, we want to take a sell trade, and we don't want to take a trade contrary to the underlying trend. So here you can notice that still the momentum is on the bullish side, so we will not be trying to get into a sell trade here. And if suppose the momentum shifts into a sell territory, bearish territory, then only we will be in a position to place the sell trade. So now that will help us stay on the side of the trend, and as you can notice that the markets are open 24 hours, and it's not really possible for human beings like me and like you to stay awake all the time and stay attentive to the charts. So it's always better to have an algorithm doing all the work for us, and then we can utilize our time elsewhere with friends and family, or just to do any another algorithm development or whatever you feel like. So I always prefer to trade with algorithms. It also saves us mental stress and the emotional turbulence, and it's also more efficient. So here we will first try to see how the trades will execute if we define or design an algorithm using this acceleration deceleration. Of course, we will need to do more optimization if we want to make it really profitable. First, we will try to see how the acceleration deceleration oscillator works on its own, and then we will add more indicators as we feel like to do the optimization to make sure that trades are executed only when we want to and not the otherwise. So let's get started. Today it's 21st February, so I have named this algorithm which we will be developing today as Feb 21st, and here to get a head start I have also brought in some if blocks and this indicator AC. Here you can read its info. It is same as it was on the first slide of the webinar's intro. Now let's first do the instrument subscription. We will be utilizing on tick start. So on tick means the initialization will sorry, on candle. So on candle means the initialization will be happening whenever a new candle is formed, and the least candle can be of 10 seconds, and it can be up to 1 month. So he will do the instrument subscription, and for that we need the default instrument, and the default instrument needs to be matched to the candle instrument, and the candle instrument is here, and we will match the candle instrument with Euro USD. So that way we will have a proper instrument subscription, and the algorithm will work as is intended. Now let me find Euro USD. It's a tedious job to locate the Euro USD in this list. So here is the Euro USD, and here is the on tick candle instrument subscription. If you want to do it on tick, then the subscription has to be for default instrument, then last tick instrument last, and then it has to be matched to the desired instrument which we want to take. And while doing it on candle, we just match it to the on candle instrument, and while on tick we go for last tick. Okay, I hope you got the point. And we also want only one position to be opened at a time. So what we do is we take the position amount and then we assign the zero value, so that trade will open only when there is no positioning, there is no open position. So let's go for the position info, and here we will go for all position amount. So it will include pending as well as let me close this. Uh, so here all position amount is 0. Let me write 0 here. So I have written 0. Now coming to the indicator, we have got this AC block, and whenever there is no open position, we will our algorithms will straightly go for checking. We will here we will utilize the hourly time frame, and shift, we are not going for any shift. And now, as I said, that we will simply be looking at the trade setup, which will open a trade when these momentum shifts from bearish to bullish. Then the buy trade will be opened, and when the momentum shifts from bullish to bearish, a sell trade should be opened. So for that, we will basically need two blocks of acceleration and deceleration oscillator, and we will need to utilize a look back period also, so that we are able to check when the candle prior to the last candle was doing. If it was in the bullish territory, then we will check whether the last candle, the last bar is in the bearish territory, and if that's true, a sell trade will be opened. So for that, we will bring in additional AC indicator. So where is the momentum? And here is the Bill Williams. It will all these indicators, the Williams Gator, Fractal, BMFI, Awesome, Oscillator, Alligator, AC. All of these were developed by Bill Williams. And here we have brought in these another block, and here also we will be utilizing the hourly time frame. So we choose the hourly time frame here, and output values positive, positive and negative. And let's assign the look back. So what we do is we need the changes, so we go for one last candle will be assigned will be assigned a shift period of 1, whereas a candle prior to that will need to be assigned a shift period of 2. This is shift means the look back period. So So here it is 1 and 2, and with that we are all set. Our only requirement is that we want the trade to be open, and of course this is the basic framework, and we will of course need to do the optimizations. So we will later on we will also bring in additional indicators, but for the time being let's see how the trading will happen if we simply utilize these two blocks and use the basic framework. And let's bring in the multiple blocks, multiple action block, which will so here it is not here, and we will need to take in another, I think info, no info, we will need the logical. So here we are, there is the logical, multiple action. And now the trade can happen two ways. Either we can open the position straight away, or we can open the position in a pending manner. Now see here, whenever the momentum shifts from here, as you can notice that the momentum shifted from bearish to bullish. I will increase the zoom so we can see the values better. Let's make it 150, and I hope now you can see the values here. So here, suppose if we want the trade to be opened as soon as these AC2 shifts from bearish to bullish, so the trade should be opened after this 3 GMT bar, and that is here. Now suppose if we want the position order, that is the buy order, to be placed closer to swing low, then we will of course need to see another instrument like say the min max of last 3 or 4 hours to determine where is the mean, and then do some additions and calculation, and then we can make changes accordingly, and we can place the order. And if you want the position to be open straight away and you are not much concerned with where the current price is compared to the immediate past, then I think you can go straight away for the pending positioning, pending open. We will be a bit conservative, and we want our trade to happen only when the price is closer to the immediate swing high or swing low. So what we will do, we will stick with the pending time frame and pending open. So we will not be going in for market open, we will be going in for the pending open. So now let's build it block by block. And now what are our requirements? Our requirement is that the shift one AC oscillator should be in the bullish zone for a buy trade, and of course vice versa for the sell trade. So we will need to check the value of both these AC blocks and determine where they are right now. So we need for a buy trade, we will first try to design the buy trade setup, and this positive value, and here we are. Mhm. Mhm. So we will now positive and negative, and we are going to utilize the median price. And here what we will need is so let's also see it's how it has been defined here. So we have the fast period of 5 and the slow period is of 34, and output is trend up is showing green, trend down is red, and periods calculate from custom data. We are not calculating from custom data, we are using default time frame here, and here we are. Now for determining the entry and exit, we need this positive 10 should be greater than 0. And this value 2 periods back should be negative, and here we assign the value again 0. So let's get started. The positive and the negative. The positive first input greater, and then 0, and then less. And also one thing is that we want the acceleration to be getting stronger when we are going to enter into a trade. So the current current acceleration should be higher than the prior acceleration. So what we do, we bring in another additional AC block with no shift, no loop back period. It will be current acceleration, and the trade will be opened only when the current acceleration is higher. Then we will also need one more additional leaf block for determining the bullish momentum. And let's take the Williams indicator and AC. Here it is. And now I think we will be able to do only basic setup today, and then on Monday we will also try to optimize it further. And here let's change it to the hourly. On the hourly time frame, shift is 0 here, and the negative and positive. The positive, this 19 should be greater than earlier positive. And now we have a better sense of how this setup is going to work. So here we are doing the optimization. and the negative should be less than 0. It is positive greater than 0. These are actually variables, and these are calculated dynamically, and we have to make sure that the values are as per requirement, and that's why I have done this 0 and comparison. So it is the trade should happen only when these basic conditions are fulfilled. So let's get started. We want to put in the sell trade. So what we do is we utilize the pending open, as we want the order to be placed in such a manner that it is closer to, and I think if we are going in for a pending open, that will mean that we will need to do additional calculations. So maybe I think we should do simple setup otherwise, but let's see the pending open also. Let's hope we will be able to complete the setup today itself, but for the pending open we will need to do some additional calculations here. This value should be greater, so here you can read it, first input is greater than second, and then the buy order will happen, and we are going in for a buy limit, as our order is going to be placed below the current market price. And to do that calculation we will need to bring in another calculation block, which will add and subtract and also do some changes. Now what we need is another pending open for sell side. I think sell side we will do it on the Monday. For the day we are only going to make the buy side, and we now need the calculation block to do the calculation. So here it is. We will need two calculations. One is for the validity of the order which is going to be placed, and another is for we will to determine where the order is to be placed. So here output values, result of the calculation, and what we do is we add some pips from the current price. So now when the momentum shifts from say bearish to bullish, what we want to do that we want to make sure that there is some buffer for us and the value is a bit lower, and in such a manner we will get a optimum price rather than going in for the market open. So we can deduct like 5 to 10 pips from the current price, and only when the price will go back on our desired level, only then the trade will be executed. So here we are. We will need the default instrument pip size, so on candle, and where is here the default instrument, and we will need the pip size of the default instrument. So we do the default instrument pip size, and then we design a new variable, and let's create a new variable named by entry BE or BE by entry price, and as we are placing the order 5 pips below from the current price, we will save it as 5, and then we will assign BP here, and we will do the multiplication, the default instrument pip size, that is the pip size of the Euro USD, and then the 5, it will multiply it, so we will get the 5 pip, and here we will utilize the last candle price. We can bring in the last bit candle close, and we will I think it will be better if we utilize the last tick price, and then from last tick we will deduct 5 pips, and wherever the market price will go to that level, the order will be executed. So the last tick is here, tick bid, so we got it, last tick bid, and then we will do some math here. We will deduct, this format is just like MS Excel, so you have to follow that methodology. We have to deduct from A3 the multiplication, the product of A1 and A2, and here we get the by entry price BE. I hope you got the math why I have written it, and in another we design now the order validity, the time frame for the order validity, and for that we will again need sorry, we will again need a last tick bid, and we bring in the last tick bid, and we want our order to be valid for 1 hour, so we bring in another variable, and we name it as time validity TV, and the value, there are 36 lakh ticks in 1 hour, so we write 36 lakh. Let me count if I'm right. I think I will need one more zero, so I hope I have got it right. Yes, 1000, 10,000, 6 lakh, 36 lakhs. Got it. Now we bring in that variable here, which we have just created. So TV is here, and we create one more variable. It can be anything. It can be 1, 2. Now this is not actually required. We can even could have gone in without it, but let's make it. Suppose if we later on, if we want to reduce the time to only half an hour, we just have to reduce it, and the time validity, and here we will write it a time period, and here it is 1, so it will be like 1 hour, and we do the product of the TV and TP, and then we add it to the last tick price. So let's do it. A1 plus A2 into A3. So here we have got this product, and we will make this output as OVT, and I think we will not define that. We will bring in the so we have this good till time, we make it as order validity time and we assign it here. We have got the result of the calculation. So the order now will be valid for 1 hour and the BE is the buy entry we will put in here. So we have got slippage we can assign it for 2 pips. It should be good enough. And now we will try to stick with the default here and here we can change it to the 1 lakh. So what we do is we modify this to 0.1 million. So our buy side is now done and then we have to connect so this is the buy side for our algorithm, which is going to use only one indicator, and of course we need 3 blocks for that. So here the design is like this. When the momentum shifts from bearish to bullish, it will check whether the current value is positive, that is above 0, and not current value also, and also one candle back. It will check whether the last candle close is also showing the positive value, and a candle prior to that is in the bearish territory, and then it will be looking for buy entry only when the momentum is stronger, that is the acceleration is there compared to the last candle period, and only then in such a scenario it will place a pending order and it will be lower by 5 pips from the current tick value. So suppose now the market price is of 1.0791, then the 5 pips will be deducted and the order will be placed at 1.0786. So this is the trade setup for the day, and we will continue with this trade setup. We will also add the buy sell side, and then we will compile and try to do test run and then the optimization, but we can do that only on Monday as we are running short on time. So I hope you got the fair bit of idea of the thought that has gone into developing this algorithm, and the further optimization will need to follow. So that's it from my side for today's trading session, today's webinar session, and have an excellent weekend. See you on Monday. Goodbye.